Hey there, it's your financial maven, and it's December 2022 already. You know what that means, don't you? It means the year is almost over and tax season is right around the corner, and I'm bringing you some information and some news that you can use when it comes to filing your 2022 tax returns. Even if you use a tax professional like I am as a CPA, it's important that as a taxpayer, you are aware of what is going on. So first, I want to say that the IRS has some great information on their website, www.irs.gov, and there are specific areas of their website that can help you get ready for the 2022 tax preparation for the upcoming tax season. And I'll have the link below in my bio. I think it's extremely important that you check out that information for you to be getting ready to prepare your 2022 taxes. So make sure you check it out. All right, so I'm going to start with a few things that the IRS has actually pointed out. So one of the first things that they just talked about is you may end up seeing a smaller refund from filing of your 2022 tax returns. There are several reasons for this that they talk about, and I think their main reason is because there are no more economic stimulus payments. You know, the last payment that majority of taxpayers would have received would have been in March of 2021. So there are no more economic stimulus payments with regards to that. Another reason that they're saying that you could receive less of a refund is in 2020 and in 2021, if you took the standard deduction, which I'll talk about in a little bit as to where they're going to be for 2022, if you also then made charitable contributions, you could deduct up to $300 in 2020 and up to $600 in 2021, even if you took the standard deduction and you didn't itemize. Well, they've gotten rid of that. So the only way that the potential for your charitable contributions to really give you a potential deduction on your 2022 tax return is if you itemize them. And if those itemized deductions in total are actually more than the standard deduction. Like I said, I'll show you that in a little bit. Another thing that you're starting to hear about this whole thing is the third-party payers, $600 threshold, these 1099Ks. Well, I'm here to tell you that it's really related to if you have a business and you are receiving income, payments for things that you've provided, whether it's a product or services, and you've gotten paid for more than $600, expect to get a 1099K from those third-party networks, like a Venmo or a PayPal or a Zelle, things like that. They reduced that threshold from $20,000 of income to $600 of income you may be receiving or payments you're receiving to your business. But please note that the money that is received from your family, your friends, for gifts, for reimbursements, for personal expenses, those are not taxable. Personal expenses would not be taxable as income, but any income you would receive as a business through those third-party networks, that's $600 or more, expect to see that 1099K, and that could reduce your refund because you're showing more of your business income as you should. Okay, so another thing I wanted to point out is last week, which ended last Friday, December 2nd, the IRS had their National Tax Security Week. I'll leave the link there for their security summit. There's a lot of great information in there you absolutely have to check out. But the one thing that I want to actually highlight is your identity PIN. So before, the IRS only allowed it if you had identity theft. Well, in the last couple years, because of COVID, more people filing online, things like that, IRS has been pushing you, the taxpayer, to get your identity PIN. And I also highly recommend it. I'll leave the link to the Get Your Identity PIN below. You cannot get that, though, until January. They're upgrading the system. So you have to wait till January to do it. But I'm going to highly recommend that you do it when you go to electronically file your return or if you have somebody else filing your return. I think it's extremely important to have this. It's another step to identify who you are, to avoid things. And it's definitely something that the IRS is pushing. I will tell you, and I tell all my clients this, even if you're filing a married filing joint return, You are each considered an individual taxpayer. And as an individual taxpayer, you each need to get your own identity PIN. And in fact, you should each get your own account on the IRS website so you can get your PIN, take a look at prior tax returns, see if you've made any estimated payments, things like that, tax notices, etc. But that identity PIN, you definitely want to do. So like I said, you'll see the link down below. All right, so now I'm going to give you some information on standard deduction, where the tax rate brackets are going to be, and any other tax news that you can use. Okay, so here are your standard deduction amounts. What does this mean? First, they've increased from 2021. These are the new amounts for 2022. Second, if you're not going to be able to itemize the tax IRS and on your tax form, you're still entitled to a standard deduction amount. And these are those standard deduction amounts. So if you think you're going to be able to itemize and your itemized deductions are larger than any of those amounts, so for example, if you're married filing jointly, and your itemized deductions are larger than the $25,900, you'll get the itemized deduction amount, which may or may not include your charitable contributions, however you itemize. But if your itemized deductions don't reach this threshold, this is what you'll get for a deduction. So it has increased, which is nice. And again, this was from a tax act back in 2018 that gradually was increasing the standard deduction. Okay, these are your marginal tax rates. These are your tax brackets for 2022. Well, what does that mean? Well, that means so last year, let's say you were in the 22% tax bracket and you had married filing jointly and your income, your taxable income was in between the 83,000 and the 178, then you'd be at a 22% tax bracket. But it's important to understand this because you can see that they've shifted. So if you go back and you research 2021, you're going to see the tax rates and the brackets have shifted. And if you're on the cusp of maybe hitting a different tax bracket, you still have a little bit of time to talk to maybe a CPA or tax professional, see if there's some tax planning, last minute tax planning you can do. Maybe there's some estimated tax payments you need to make to kind of bridge that gap. But I think it's important to take a look at these and understand that your tax rate may change for 2022. All right, this is something else that is extremely important. If you track your business miles for your business, when you travel for your business, the rate changed July 1, 2022. So prior to that, for the first 6 months of 2022, you had 58.5 cents per mile. And after July 1st, it's 62.5 cents per mile. And the reason why I say this is so important to track is because you need to know your business miles for the first 6 months, and then you need to kind of document what your last 6 months of mileage is so you can take that potential business mile deduction. But the other thing I think is just as important, because you're going to need to know this, and if you're having someone like myself as a CPA prepare the return, is you need to know what your personal miles were for the year, or really your total miles driven for the year. So if you drove 12,000 miles for the year, and of that 5,000 miles is related to business, okay, that 5,000 miles for business, what part was from the first half of the year and what part is from the second half of the year? And I will tell you, you absolutely should be recording and documenting your business miles, because if the IRS were to show up and send you a notification and they're questioning your business mileage rate deduction, you need to show proof that you're properly tracking the difference between your business miles and your personal miles. It's definitely something you need to know. And of course, if you're having somebody else prepare your returns, they need to know that information as well as yourself. So definitely take a look into that. And for my educators and teachers out there, there's some great news. You now can deduct up to $300 in out-of-pocket expenses on your 2022 tax return. It used to be $250. Now, this applies to eligible educators, which I will have the link down below, but it includes anyone from kindergarten through grade 12 in both public and private education, your teachers, instructors, counselors, principals, aides that have been in the school for at least 900 hours for the school year. So definitely going to want to check what are eligible deductible educator out-of-pocket expenses. And these are your $300. And so definitely check the link below. I think it's very important. All right, so I have a couple of other reminders to give you. So here's one thing I always tell my clients, and those that are not clients, friends, family, etc. Your W-2s and any 1099s you may receive, you're not going to most likely receive them until the end of January. And that's because payroll companies that work with your employers, businesses, etc., aren't required to mail those things out or send those things out until the end of January of 2023. So you may not have all your tax documents at the beginning of January. And you may not have all of them at the end of January because some might not come till February or March, depending on what you're waiting for. For example, if you're waiting on a K-1 from a business, most business returns don't need to be filed till March 15th. So you may not get all of your documentation until then. So it's something to keep in mind. But I also feel that you need to try to gather as much of or all of your information prior to you sitting down and either preparing the return yourself or having somebody like a CPA or a tax preparer do it for you. The more organized you are, the smoother it's going to go for tax preparation. Believe me, I've been there. I've seen the shoebox full of receipts where I've spent weeks having to sort through it before I even could get started to prepare the return. So it's very, very important that you are as organized as possible. It definitely helps both yourself and your tax preparer. And on a side note, for those that are businesses and nonprofits, for people that you pay like vendors or independent contractors to do services for you, you really should be obtaining a W-9. This will help you determine if you need to issue them a 1099 non-employee compensation or a 1099 miscellaneous form. And those forms are due to be sent out by the end of January 2023. It's really important that you get this form. The IRS is has been cracking down on this. If you're paying someone who's a sole proprietor or in a partnership or is an LLC, but they're not incorporated, they're not an S Corp or C Corporation, you definitely need to determine if anybody you're making payments to should receive these 1099 forms. And the way to do it is to get a W-9, which you can get at the IRS website. Now, a little word of caution, some S Corps and C corporations where you may have made medical or health payments to or payment to an attorney that might be incorporated, those you most likely will have to issue a 1099 NEC or miscellaneous to. So it's something to definitely look into. And again, you can find information at irs.gov for this. And as always, please reach out to either a CPA or a tax professional, or you can check out the IRS directly for that information. And you can also check your state's Department of Revenue for any state-related or local questions you may have. Thanks so much for spending time with me today. For now, this is your Financial Maven.